Okay, yes, great, everyone. So good morning, everyone. Thanks a lot for that. And yeah, to all of you who, 200 plus people. Okay, yeah, great. Thanks a lot. So once again, good morning, everyone. And I'm excited to welcome you to Halogen's webinar on crypto taxation in Malaysia. It is a topic that's, becoming more and more relevant as crypto investing continues to grow. And I'm sure some of you are already invested or, thinking about getting started. So which is why this topic probably caught your interest. And to introduce myself, my name is Jiaying. I'm from the Halogen Capital team, and I'll be your host for this webinar. And of course, as you can see on the screen, I'm not alone here. To guide us through today's session, I'm joined by not only one, but two amazing speakers. So let me introduce them a little bit. So First up, we have Han Liu. So he's the founder and CEO of Halogen Capital. He's a fund manager and fintech entrepreneur, best known for founding Ringgit Plus, Malaysia's top financial comparison platform. Then at the same time, he's also a certified financial planner. With that, he has actually helped thousands of Malaysians grow their wealth through both traditional investments and more recently, digital assets like crypto. So joining us as well is Tian Yi, tax partner at PwC Malaysia. So she brings over 20 years of experience in tax advisory and compliance. So Tian Yi has advised a wide range of clients across industries and is one of the most knowledgeable voices when it comes to navigating tax issues in the evolving crypto landscape. So yeah, between the two of them, you'll be hearing perspectives from both the regulatory and the investment sides of the equation, how crypto taxes actually work and how it applies to you, to investors like you. So before we jump in, just a quick note on how the session will run. So we will start with some sharing from both speakers, and then we'll move on to the Q&A session at the end. So I think most of you should be able to see the Q&A box. So do drop us your questions. And then at any time throughout the session, we'll try to get as many as many as we can. So yeah, I think with that, I'll now hand things over to Han to kick off the session. So Han, over to you.
Thanks, Jiaying. Hope everyone can hear me. Morning, everyone. Han here. There's quite a lot of you, so I imagine there may be some questions here and there. Most of them, hopefully, is for Tian Yi, not myself, being the tax expert in the room. But Jiaying, thanks so much for the introduction. But maybe a little bit more on me on today's session, which is what you said just now. We'll talk a bit about Halogen, who we are, if you haven't heard of us. If you have, thanks for joining anyway. I'll speak a little about the crypto market, where we are today. Yes, morning, Chan. We'll speak about where crypto is, where it's headed, and why this matters, right? Before I pass to Tian Yi, a little on tax matters relating to, yes, Halogen things, but also specific to digital assets and cryptocurrencies in 2025. There are changes from last year and the year before. So there's things that really matter that you really want to listen to Tian Yi. Then we go on to some Q&A lah. So on me a little bit, almost 20 years of experience. I've been in fintech, I've been in crypto for quite a while now. Jai mentioned I am a chartered financial analyst and certified financial planner. I have helped many investors get involved in investing in cryptocurrencies, digital assets, and overall investing as well. In my time, both at previously Ringgit Plus and the last 3 years here at Halogen. Do follow me on X if you haven't. I do say some funny things sometimes, hopefully. And a bit of Halogen, for those of you who don't know, we are Malaysia's first licensed digital asset fund manager, aka crypto. We are a crypto fund manager based here in Malaysia. We've been licensed since 2023. So we're 2 years in operation already, and we've grown really quickly the last 2 years. We've got public funds, which I'll share a little bit more on later, where you can invest in unit trusts with crypto inside. And it's not just us, we're supported by a lot of institutional partners, auditors, banks, advisors. But the main advisor, I guess today I've circled on the box there, PwC, which Tian Yi is representing. They are the funds. So all our unit trusts, all our wholesale funds have a tax advisor, and it's PwC. PwC also advises us, the company Halogen. So we're very grateful to have them as our tax advisors and as panelists for today. So when I tell people that, hey, we do crypto fund management here in Malaysia, a lot of people ask me, hey, Han, how is that different from if I go and buy crypto myself in an exchange, right? And say, hey, what do you mean by your first licensed digital asset fund manager? I usually show this slide, which is, in the digital asset and crypto world, life is quite similar to the equity world. So in the equity world, if you want to go and buy and sell and trade equities, you can do that on exchange through on brokerages that go through the exchange. People like Rakuten, Momo, you guys have heard all these names hopefully before. But if you need somebody to help you with your investment, or you want to have a more buy and hold strategy, you don't really want to trade yourself. You need someone to manage on your behalf. Why? Because everyone has their own day job, right? Everyone works and wants to spend time at their work or spend time with their kids or families. They don't want to spend like hours a day trading. That's what the fund management industry is, and that's where we sit. Right? We're there in the top left corner. And then in the cryptocurrency world, the same exists, right? Which is if you want to go and trade yourself, buy and sell, you like the thrill of buying and selling and trading actively. There are exchanges, brokerages, you can do that. But we exist now on that right-hand corner there, which is we are helping Malaysians manage crypto within their own structures, within their own portfolios, and helping them do it for them, right? So you don't have to do it yourself. There's all kinds of extra benefits, which I can say a little later. But essentially, that's who we are, where we sit in the ecosystem. And being a fund manager, we have funds. We have our 6 flagship funds launched already and live. And for example, our Bitcoin fund is our most popular fund. It's been live for almost 2 years. We have an Ethereum fund, obviously. We have a multi-coin fund called the Titans Fund, Crypto Titans Fund, where if you want access to the whole crypto ecosystem, we invest in a big basket and we manage and rebalance and we optimize on your behalf. We also have traditional funds. We have income funds. We have a money market light fund giving 3.5% to 4% return on the right-hand corner there. So a full range of funds. We are a fund manager after all. We manage funds across the asset spectrum. So we're a multi-asset fund manager with a specific specialization in crypto. So some of you may have heard me use the word crypto. Some of you may have heard me use the word digital asset. What is the difference actually? Like a lot of people, I guess, may be asking. And the best way I explain is via this next slide, which is, it's not quite the same thing, but almost, right? The best way to think about it is that most of us probably would have heard of the first cryptocurrency in 2009 at the bottom there, Bitcoin. It is I guess the king coin, the most popular cryptocurrency, the largest market cap, etc., etc. It is and there are obviously more cryptocurrencies today than just Bitcoin. So there's a bigger set that Bitcoin sits under. We'll call it cryptocurrencies. Things like Ethereum, Solana, Litecoin, Ripple, Avalanche, etc., etc., etc. Basically, these are currencies or crypto assets based on using blockchain technologies. They are not the same as Bitcoin, but Bitcoin is the largest cryptocurrency. So that's kind of like a little umbrella for what a cryptocurrency is. And in Malaysia, the entire industry is regulated under this term digital asset. So and both Bitcoin and cryptocurrencies sit under a bigger umbrella, right? Where called digital assets, where it's not just Bitcoin and crypto, but includes things like real assets, NFTs, CBDCs, digital art, digital wine, digital property, when it's tokenized, right? So it represents not just money and transferring money or ownership or money or like a currency of a specific project, but value or ownership, or even like voting rights, right? And there's a huge growing use of all kinds of digital assets in many markets, including financial markets. So hopefully everyone gets it. When I say digital assets, I say crypto, I say Bitcoin, more people roughly know what this means. Not all the same thing. They're all subsets of each other. But why does this matter? Han, why are you going through all this? Why do you even create a company for crypto and digital assets, right? And the reason why Bitcoin is crypto, no? Yes, answer the question straight away. Bitcoin, as I said, if you can see from that graph, it is within the overall ecosystem of cryptocurrencies, right? But a lot of people equate the two together. It's not the same thing, right? Bitcoin is a cryptocurrency, which is in fact also a digital asset, but not all cryptocurrencies are Bitcoin, right? That's what this graph means. And it matters because in the last 10 years, we've seen tremendous growth.
This mosquito in here.
We've seen tremendous growth in someone's joined us me. Hold on. Hold on, yeah. Somebody has joined as me, so I need to get rid of. It's okay. I'll continue anyway and let Jia Ying handle that in the background. What was I going to say? So the crypto market has really grown in the last 10 years, right? From a very niche industry, 5 billion market cap, very small, to the largest alternative asset class today, if you get what I mean, like 3.32 trillion is huge when you're not talking about equities, bonds, real estate. It's a very, very large alternative asset class. It matters, right? Not all cryptos are investable. There are over 10,000 kind of assets which have price tracked. But I can promise you not all are investable. So you really need to really understand the space a little better. And to give you a context of what 3.2 trillion US dollars or about 14 trillion ringgit is, right? It is large, right? It's second as an asset class only to gold, right? It's now the second largest asset class in the world in that sense, right? Asset in the world, specific asset. And Bitcoin alone is the fifth largest. It's really large, right? Bigger than your Apple, Microsoft, Nvidia, etc. So it matters, right? You must know something about it. Positive or negative, whether your view is positive or negative depends on you, but you must have some view, right? And that view includes regulatory, includes taxes, right? Which is why we're doing this webinar today. Allow me to give like a couple of slides on where things are, since obviously 10 years is a long time. How about the last, 4 or 5 months, right? The last 4 or 5 months have been quite interesting for crypto. It's been really volatile for a couple of key reasons. Not the biggest one has been really the new administration in the United States. Feels like quite a long time ago, but the election was about 6 months ago only. Inauguration was only about 3.5 months ago. In January, on the back of the first is so-called pro-crypto US president and US administration, like we saw Bitcoin hit over 100,000 for the first time in January, heading to its all-time high of 109,000. Lots of institutional interest because of now the perceived regulatory burden lifted. And then in February, we do this with our clients a lot, which is give market outlooks. We gave an outlook in January saying, hold on, he's not going to go straight into pro-crypto stuff first. He's going to do the other stuff first: immigration, tariffs, dismantling wokeism, DEI, that kind of stuff. And indeed, in February, President Trump did the first kind of tariff punch, right, on his neighbors, China, Canada, Mexico, which caused turmoil in markets, and Bitcoin was not excluded. So a firm dropped back to the 80,000 range. Before, in March, this very volatile president creating very volatile markets, announcing a strategic crypto reserve via executive order, right? So the first time, like the actual government, right, US administration, saying something pro-crypto, signing something pro-crypto. And then in early April, don't have to say too much. I guess whoever's interested in markets will have seen this. Liberation Day tariffs, April 2nd. Lots and lots of a bit of confusion what's happening. Lots of turmoil in the markets. I guess Tianyi also got a lot of questions. What does a tariff mean versus a tax? We'll talk to her about it later. But if you want to. But how did crypto as an industry, Bitcoin specifically, react, right? Actually, surprisingly, much more resilient than traditional equity markets, traditional risk markets. Stronger resilience, meaning it dropped a lot less in the weeks after April 2nd. So this is April 2nd here, by the way. Equity markets dropped first. Bitcoin initially held some value before dropping a little less, and has rebounded tremendously for the key reason that when there's a specific risk on the largest capital market in the world, the US market, right? People run to non-country specific assets. And the two non-country specific assets that came to the fore in the whole month of April was gold and Bitcoin, right? Where you can't tariff gold, you can't tariff Bitcoin, you can't change a gold's government. There's no government of gold, right? There's a US government, there's a Malaysia government, there's a European government, but there's no gold government, there is no Bitcoin government, right? So number one, a bit of resiliency. It didn't drop that much. And since then, obviously, a lot of people heard in the news. It's really rallied on the back of a little more stability in the markets alongside that non-governmental trade. So that's kind of exciting for us, that to see crypto being used in this way, or Bitcoin specifically being used in this way, where it's a, I don't say safe haven, but it's a hedge against uncertainty in sovereign government activity, right? When governments behave weird, like the US government has done in the last month or so, people run to assets which may be not correlated with a specific government. Okay, US equities have since rebounded, but certainly crypto has rebounded quite a lot more. But then where does it go from here? A lot of people ask me in the past week, hey Han, Bitcoin hit 100,000 already. What's your prediction? What's happening next? I don't have crystal ball, but what we can say is at Halogen, we have dedicated market participants. We have dedicated observers of the market. We have dedicated research and trading teams here, really looking at key levels where our investors can really watch, right? We took this last night. The price is a little different this morning, but not too far. There are key levels to watch in the short term. There's the natural resistance, which is the all-time high. If we breach that, it's really open air until the 120 mark, which is psychological mark, right? So you will see, we are seeing quite a lot of resistance naturally at that all-time high level. That's a typical selling point for most people. And then subsequently to that, the 120,000 mark, it's really like a clear air between that 110 to 120,000. And then on the support level side, 100,000 is a clear psychological support. We saw a lot of selling activity previously at that level, which means people may be looking to buy back at that level. That's 100,000 psychological support level. Before another two levels based on the past kind of 2 months, which is where during the initial tariff war, where was the support level? Set at 74,000 level. Great places for people to consider buying, right? So these are the kind of things we look at, but that's technical, right? On the fundamental basis, we are really looking at the long term, right? Right, which is long term, i.e. the next 3 years plus of this Trump 2.0 administration, what his actions are relating to the crypto industry. Already signed an executive order. What else is he going to do, right? Did he appoint indeed a pro-SEC chair? SEC is the Securities Commission in the United States. He did. Paul Atkins, highly pro-crypto, chairman of the Token Alliance, very, very pro-crypto SEC chair. This is very, very different to the previous SEC chair, which was kind of pro-Bitcoin, but anti-everything else crypto. Are they going to actually start buying Bitcoin or start transferring Bitcoin from the Department of Justice to the Treasury Department or the Fed? Probably Treasury, not the Fed. I.e. setting up this strategic Bitcoin reserve, just like they have a strategic oil reserve, right? Or a gold reserve or a grain reserve. Are they going to create a strategic Bitcoin reserve? Are there going to be real tax cuts, specifically on capital gains relating to crypto? Is there going to be loose fiscal policy? Because loose fiscal policy really drives crypto prices, right? When there's more spending in markets, more liquidity. And last, this administration has been a lot more pro-crypto. The SEC chair has been appointed in April. He's already said all these extra ETFs to follow on from the Bitcoin and Ethereum ETF last year, they're going to go through this year. So things like the Ripple ETF, the Litecoin ETF, Solana ETF, etc., etc. So these are what we're looking at fundamentally, the fundamentals of the industry, right? But at the global macro side, cannot ignore, right? Tariffs, immigration policy really going to impact global trade, right? And these were priorities outright before crypto. A lot of people thought once Trump's in, let's go for crypto. Other things will happen first, which will still affect crypto. So we need to really watch out for these things before we just assume everything is going to happen, right? If we do get a global recession, which is looking less likely this week than last week, but if we do get one, you expect liquidity to really dry up and drop hard. And this will hit crypto first and hard, right? If you remember in the COVID global recession, crypto was hit very hard first, right? Hard and first, right? But on the flip side, when liquidity gets pushed back into the markets from central banks, the Fed, Bank of Japan, Bank of England, European Central Bank, even Bank Negara last week injected some liquidity back into our own market, right? For those of you who follow what Bank Negara said and done last week, reducing our strategic reserves, allowing banks to lend more. I think it's almost 20 billion ringgit more into the market. Stuff like that, that will impact crypto first, and that's the nature of the asset class, highly sensitive to liquidity, right? And last, altcoins are something we're looking at. Altcoins is every single other crypto other than Bitcoin. That's kind of the easy way to look at it. In a typical altcoin market or typical Bitcoin cycle, Bitcoin leads the market first. It gets all the headlines above 100,000. Everyone thinks very expensive. The natural instinct for most investors, which I hope everyone is starting to feel now, but even if not also, it's okay, is that, hey, look, Bitcoin's already run up. Is there anything else I can invest in? And that's what creates the flow through to altcoins. That's why you hear things like Ethereum starting to run up. And eventually things like other L1s, other cryptos, and funny things like the meme coins, right? So far this cycle until the past week, altcoins have really lagged. The past week has really been that altcoin season starting, so it seems. But so far this cycle, altcoins have lagged. And this will be supported by these altcoin ETFs coming up, right? Which is going to be interesting. It's going to be key for you or me, or if you don't want to follow it yourself, you can talk to us at Halogen. We really follow this closely. Every single approval stage for every single ETF, we follow quite closely. I've only got 1 or 2 more slides, so allow me to finish. This is just a reminder that we are a fund manager. You don't necessarily, buy and sell on our platform. You invest in crypto on our platform. If you're not an active trader, come to us, right? If you're an active trader, you already know where to go. If you are a long-term investor looking to add crypto allocations to your portfolio, looking for some advice which we can give with investing in cryptocurrencies, we can do that. And that's our place in this space in Malaysia, right? We hope to fulfill that space. And this is why people choose us, right? We are currently the first and still only licensed entity approved with crypto funds here in Malaysia. If you look through the entire funds list, I mean, we're still the only ones having crypto onshore here in Malaysia. And why it matters is that we hold crypto in the trust structure, right? Unit trust, the word trust. Trustee means that a trustee holds assets on your behalf, not us. We don't hold any assets, right? So it's that key risk in crypto is mitigated. We're also very convenient, right? If you want a specific strategy, we do it, right? With a single investment, you invest one time, buy into a strategy. We actively manage on your behalf. We have local guys here doing specific localized research that matters for you, a ringgit investor. And we're highly compliant, right? I'll let Kenny talk about the tax things later in terms of being a capital investment. You make capital gains on unit trusts, like our wholesale funds. Why that income may be tax exempt for you versus active trading income. Sharia compliance is something that we have across the board. All our funds are Sharia compliant. And most importantly, we meet most of global and certainly all local accounting and audit standards, right? Like another big four is our auditor. But we work very closely with PwC on the tax side, right? So with that in mind, like when people ask, hey, why should I choose y'all? This is what we present and say, hey, look, we offer something a bit different, right, in this market for people who are concerned about the risks of trading, either the custody risk or the tax risk. We offer this. But to talk more about the tax things, maybe I pass to Tian Yi at this stage, and pass it to her to talk more about crypto taxes in Malaysia, which is exactly what we all came here to listen, right? Not me talks anymore. So Tian Yi, over to you.
Thanks, Han. Good morning, everyone. Glad to see many participants this morning. So, as introduced by Jiaying as Han, so I'm Tian Yi, a tax partner with PwC with more than 20 years experience. So today, I'm here to share with you a topic that's actually probably close to your heart, right? Since you're actually joining this webinar. So this is actually, if you go to the next page, 2 key areas that I wanted to actually cover today, which is one, generally a taxation of unit trust, right? So that you know why actually Han mentioned earlier is that, hey, if you invest in unit trust, there's actually a lot of exemption and there's actually also no capital gains tax and things like that, right? That is the first part. The second part is actually more in terms of taxation of digital assets in Malaysia, right? So I will actually be covering these two main topics today. Okay. Now, if we start on with the first one in terms of a taxation of unit trust. Now, for those who are not familiar with it, right? A unit trust is effectively a collective investment scheme. Means that all the investors, right, which we call unit holders, will come together to invest in a unit trust fund. So the funds that was listed by Han earlier are examples of the unit trust funds, right? Where then each of these unit trust fund has a mandate to fulfill. where they are mandated to invest in, for example, fixed income security, invest in crypto, and so on and so forth. So that's why if you actually look at the diagram at the right-hand side there, so as a unit holder, you actually invest in the unit trust fund. The unit trust funds then, based on the mandate, invest in all the various investment assets, right? And of course, what's the whole purpose? Sorry, going back to the earlier slide first. The whole purpose of actually investing in the unit trust, right? So go back to the first, right. Investing in the investment assets is, of course, that you want investment returns, right? You want to be able to have investment returns, and the type of income of a typical unit trust will actually be things like your dividend, interest, capital gains, other income, foreign income, and so on. And for a unit trust, right, for whatever that is actually taxable, for a unit trust, it is taxed at a 24% tax rate. But I'll share with you later as well that there are various exemptions that are available for a unit trust fund as well, right? And for yourself as a unit holders, right? Sorry, go back to earlier slide. Yeah. So for yourself as a unit holder, right, you also be concerned and say, hey, if I invest in unit trust fund, right, what happens, if I actually redeem or actually sell off my unit trust fund and I make a gain out of it? Do I actually need to pay taxes on this, right? Generally, I would say that the tax treatment does depend on the profile of the investor. Okay, if you are actually an investor who's actually looking at more long-term appreciation and all those, you're not actively trading, then yes, whatever actually gains that you do realize from disposal of the unit trust, right, will actually be capital in nature and it is not taxable. So generally, I would say that from a unit trust holder perspective, if it's actually a company that's dealing in securities, insurance company, financial institution, typically these are the profile of the companies which will be treated as trading. Means whatever gain that they make on selling the unit trust will be treated as a taxable gain, right? Whereas if it is actually capital in nature, then it is actually not subject to tax. As I mentioned, it is subject to batches of trade. Again, I will actually share a little bit more details on batches of trade later. Yeah. So if we actually move on to the next page. Now, I mentioned earlier for a unit trust, I will say that it is a very attractive industry in Malaysia, in a sense that the government actually accorded quite a number of exemptions for unit trusts, right? So some of the two prominent ones are basically, number one, if let's say a unit trust fund were to invest in equities means you invest in shares, right? And you receive dividend as a return, it is tax exempt. Yeah. So the dividend income is not subject to tax when you receive it. Then the second prominent exemption that is available for unit trust fund is essentially there are various exemptions available for interest income. So interest income, we are not just talking about FD interest income, right? Of course, those could actually be included. So it could also be interest or profits for bonds issued by government, or actually debentures or Islamic securities that is actually issued by any issuer out there, so long as it is actually approved or registered or lodged with Securities Commission and all, then whatever interest income that is actually derived, right, is actually exempt at the unit trust level. Okay. Now, if I move on, right, some of you may actually be aware that Malaysia in the past, right, before 2024, we do not actually have capital gains tax regime, except for real property gain tax when you sell real property, right? But effective 1st of January 2024, right, the government has actually introduced capital gains tax. And when they introduce capital gains tax, is I would say broadly two categories. One is on Malaysian-based asset, which is the Malaysia unlisted shares. The other category is on foreign capital gains tax, which I will cover later. Yeah, let's just focus on the Malaysian asset first. Okay, so I mentioned earlier in terms of we need to talk about taxation, right? Depends on whether is it capital in nature or revenue in nature. But in this situation, with the introduction of the capital gains tax effective 1st of January 2024, what happens is that if just to backtrack a bit, when Malaysia government introduced this capital gains tax, the scope is still fairly narrow. When I say fairly narrow, means that it will only apply if you actually dispose of shares in a Malaysian unlisted company. What it means is if you sell shares in Sendram Berhad, right? So imagine if a company actually owns shares in another company, a Sdn Bhd, and you actually sell off the shares, right? That is where capital gains tax will apply. Yeah. So this, just to be clear, right? When we talk about who is in scope to be taxed under capital gains tax, is companies, limited liability partnership, cooperative, and trust body. Trust body, which is a unit trust, right? So if you are asking, hey, as individual, if I actually own a Sdn Bhd shares, if I sell it, am I subject to this capital gains tax? The answer is no, right? Because you are not in scope. The entities in scope is basically company, LLP, cooperative, as well as trust body. So trust body and companies, right? If, let's say, example, the unit trust fund invests in a share of an unlisted company, then if they do dispose, right, based on this latest changes, capital gains tax will apply, right? But again, I have a latest update that I will update you later in respect of the development in this past 1 year plus. Yeah. So in terms of capital gains tax, I think the next question you say is that, okay, if I dispose a Malaysian company, right, dispose of a share in an unlisted Malaysia company, how much of capital gains tax do I need to pay, right? Now, then it depends on when you acquired the shares. As a transition, right, if you have already owned the shares before January 2024, you have an option. You can either pay 10% of your gains, right, or 2% of your gross value, whichever is lower, right? So this is sort of a transition. Yeah? But for any shares, right, unlisted Malaysian shares, that Malaysian company shares that you acquire from 1st of January 2024 onwards, right, then it is subject to 10%. You don't have the 2% option anymore. As I mentioned, the 2% option is more transitional. Yeah. And if you notice, I put a box in red there, right? So although I mentioned the effective date is 1st of January 2024, but the government actually accorded a 2 months exemption, right? A 2 months exemption whereby any disposal that was made between 1st of January 2024 to 29 February 2024, it's exempted. So what it means is effectively, actually capital gains tax is effective 1st of March onwards. Yeah. So you may be thinking, we are actually talking about unit trust today, right? So how does it affect unit trust funds? So from a unit trust funds perspective, as I mentioned, one of the in-scope category, right, is a trust body. What it means is a unit trust fund. If they were to sort of invest in unlisted Malaysian company shares and they were to dispose it, right, based on this particular provision, they will need to be subject to capital gains tax, right? And this will actually include things like redeemable preference shares. Yeah. But hang on this thought first, right? Because as I said, a lot of development in this past 1.5 years. So I'll share a little bit more recent development updates with you later in respect of the capital gains tax. Yeah. Now, the second thing I just want to cover here is in terms of the expansion of the foreign source income. Okay. For some of you who are actually sort of investing outside Malaysia, right, you probably pay attention to this particular evolution, right? And you're probably aware that before 2022, everyone is actually freely investing probably outside Malaysia, happily remitting the money into Malaysia, and you're not subject to tax at all, right? Now, effective 2022, 1st of January 2022, right, the government has actually removed that blanket exemption on foreign source income. So with that removal of that blanket exemption, what you remit, okay, what you actually remit from outside Malaysia into Malaysia will then be subject to tax. Right. But of course, we have actually been enjoying the blanket exemption for so many years, right? So as a result, many taxpayers actually did lobby to the government. And as a result, right, if you look at the middle column, the government has eventually agreed to grant a 5-year exemption. Okay, 5-year exemption from 1st of January 2022 to 31st December 2026, whereby they actually exempt certain foreign source income. It's very generous for individuals. For individuals, right, people like you and me, if we do actually invest in any foreign assets, right, and we derive any foreign investment income, so it could be your rental, dividend, interest, and all, if we remit it back to Malaysia, all classes of income, it's exempted for individuals. Yeah, so I would say that essentially it's practically status quo compared to the past for individuals, right? But for companies now, then there is a change, right? So only dividend income received will actually be exempted, subject to meeting certain conditions, right? So if let's say a company were to invest in normal, let's say foreign bond and derive interest income, unfortunately, the company cannot enjoy exemption, because at this moment for companies, only dividend can actually be exempted subject to meeting condition, right? So this is the part relating to income. Now, again, in conjunction with the capital gains tax that was introduced, right? I mentioned earlier, the government has also introduced a foreign capital gains tax, right? Foreign capital gains tax effective 1st of January 2024. What does it mean, right? So foreign capital gains tax will apply if you actually dispose of, right, a foreign capital asset and you remit the money back into Malaysia. So effective 2024, if you invest and then you dispose of a capital asset, you remit back the money into Malaysia, it is actually taxable. But the government did also give exemption, right? To say that, okay, if let's say that company, right, does actually have economic substance. They meet economic substance requirement. Means I have sufficient number of employees, I have adequate number of operating expenses, right? So even if I remit that foreign capital gains, right, it back into Malaysia, I could actually be exempted, right? Now, then the next thing in your mind will be, as a unit trust fund, then do I actually enjoy this exemption? Because if you think about it, the substance requirement is talking about sufficient number of employees and operating expenses. A unit trust fund, yes, they do have some operating expenses, but if you recall how what was shared earlier, right? A unit trust fund is just a collective investment scheme. There's actually no employee sitting in the unit trust fund. So technically, if you look at this exemption, it doesn't seem to apply to unit trust, right? So as a result, right, the industry actually went for lobbying with the authorities, right, in terms of making unit trust continue to be attractive to investors. So if you actually look at the next page, right, in terms of, if you can go to the next page, Jai. Yeah. So I mentioned earlier there are some development for unit trust. So as a result of a lobbying by the unit trust industry, right? So two key exemptions has actually been introduced actually sometime end of last year, right? But although it was introduced end of last year, it has a retrospective effect to be effective from 1st of January 2024. Now, these two exemption is, if you remember the first one that I mentioned, right? So in 2024, there is this 10% capital gains tax. Well, if let's say a unit trust were to dispose Malaysian unlisted shares, it seems that they will have to pay that 10% capital gains tax. But with this exemption, right, essentially, even if a unit trust actually were to invest in a Malaysian unlisted shares and they were to dispose it and make a gain, right, you are exempted up to 31st December 2028. Yeah? And the second category is basically all the foreign source income, right? So when I say all foreign source income, it could mean your foreign dividend, foreign interest, foreign rental, including foreign capital gains tax, right? So all foreign income, including foreign capital gains tax, right, you will be able to qualify, or rather the unit trust will be able to qualify for exemption up to 31st December 2026, provided you meet one of the two exemption condition, right? So option A is that foreign source income has been subject to tax and the foreign jurisdiction headline tax is 15%. Or B, which is probably the easier option, is that you just need to make sure your management company, so in this instance, Halogen Capital, right? They met economic substance requirement. And what it means is that they actually have a adequate number of employees and incur sufficient operating expenditure. So I would say that the option B in terms of the substance requirement is not difficult to meet, yeah, in this instance. Okay, so these are basically, I'll say, a little bit of a good news for the unit trust industry. So you are actually assured that whatever sort of capital gains on unlisted shares or even any foreign income or foreign capital gains tax is exempted for a unit trust. Yeah. Now, some further good news, but this is probably for you personally, right, as an individual. So I mentioned earlier, right, with the introduction of the sort of foreign source income exemption, for individuals, you actually have a exemption for 5 years. Now, the good news is in budget 2025 that was actually announced last year, right? They have actually extended the exemption for foreign source income for individuals for another 10 years, right? What it means is that if you actually invest or receive foreign source income from outside Malaysia and you bring it back to Malaysia, anytime from now up till 31st December 2036, as an individual, you don't have to pay taxes. on that foreign source that you remit back into Malaysia. So this is actually the good news. You at least have certainty for the next more than 10 years. Yeah. Okay. So this is basically just to give you a very quick sort of overview in terms of the unit trust taxation, as well as the development in the past 1 or 2 years, right? Now, I will actually then move on to the taxation of digital assets. Yeah. So this taxation of digital assets, right, is based on a guideline that was issued by the tax authorities few years ago, right? And when we actually talk about taxation of the digital asset, the tax authorities adopted what are called as going back to the general principles, right? And the general principles in terms of whether you're sort of like trading, right? Are you actually sort of considered to be trading, or it's actually a long-term investment for you, and therefore it is capital in nature? Now, how they determine this is via what we call as a badges of trade. So you may be thinking, what is badges of trade, right? So badges of trade is essentially the I would say general principles, right? Different categories of principle whereby you actually apply to a particular circumstances and evaluate it on a holistic basis to say that, okay, based on all these badges of trade, is my transaction a trading transaction and therefore it's taxable as if it's your ordinary income? Or is my transaction capital in nature, means that it is actually investment purposes? And as I shared earlier, right, for Malaysia, your currently the capital gains tax is only on unlisted Malaysia shares. So if you derive any capital gains from other types of investment, it is actually not taxable in Malaysia. But if it is considered as trading, that is taxed as your ordinary income, right? So that's why badges of trade is important. Maybe let me just give you an example of what does it mean by badges of trade, right? So when we talk about example things like nature of the subject matter, yeah, so then this refers to the nature of the digital currency that is being bought and sold, right? If you typically buy in large quantity with some intention to trade, then it's more likely than not to be regarded as trading. Yeah. And if you actually look at things like, for example, motive, again, if the whole purpose of you purchasing, right, of this cryptocurrency or digital assets, right, is for you to actually actively trade so that you can make a profit, again, it's more inclined towards trading as opposed to long-term investment. So things like length of ownership, of course, the shorter the time frame that you actually own the asset, means you buy and sell quite quickly, again, is an indication of trading. Similar to frequency of trading, the more frequent you actually trade, it is an indication of trade. And mode of financing, what it refers to is that how did you fund this investment? Is it from your excess cash, or you actually obtain short-term borrowing, for example? If you actually obtain short-term borrowing to fund it, right, intention, it's more skewed towards trading because these are all short-term. Means short-term borrowing, you buy, you sell, and then you repay back. So these are just to give you a flavor in terms of an example, right, on how badges of trade works. And you need to actually, as I said, look at circumstances, look at all this holistically, yeah, to determine whether your particular transaction is considered trading, which is treated as ordinary income, or capital in nature, which is then not taxable in Malaysia. Yeah. Now, I will then go on next, right, to some examples. In the next slide, is actually something that was extracted out from the guideline as well. But these are basically based on the earlier concept of badges of trade, right? This is just to share with you a little bit more in terms of some examples of tax treatment to certain transactions involving digital currency. Yeah. So first one is, I'll say, fairly clear cut, right? Digital currency trading. If you are in a business of buying and selling digital currency as part of your ordinary course of business, yeah, then you will actually be taxed, right? As if it is trading. So it means that when you actually buy and sell your digital currency, it's no different from keeping that trading stock, right? So any gains that you derive will be treated as ordinary income, business income, and taxable. Of course, if you do incur any expenses, right, you will be able to claim a deduction against that taxable income as well. Yeah. Now, second one is mining of digital currency. If you are in a profit-seeking mining activities, then of course it is taxable because there is intention to trade, right? And any expenses or any losses will also be deductible because it's actually part and parcel of your business income. Yeah. But let's say if you actually do receive tokens, right? And then subsequently you dispose of and make a gain. That taxability of the gains on the token will then depend on the concept I mentioned earlier, the batches of trade, right? Is it actually revenue in nature or capital in nature? Yeah. And of course, fee from mining services. So sometimes you actually may provide this as a service, right, to another party. If you mine on another party's behalf and you receive a fee, then you are providing a services. If you're actually providing a services and deriving a fee, then you will actually be taxable on that. Yeah. Now, next is talking about accounting for digital currency in a business transaction, right? So actually, for digital currency can be used in many ways, right? And one of the way is that, let's say you may actually be selling certain goods and services and your customer say, hey, do you actually accept digital currency as payment? So instead of giving you cash, I am giving you digital currency equivalent, say, maybe to the value of the sales, right? If that is the case, so as the seller, right, what I need to do is that if I do receive digital currency, I will need to actually record, right, my sales or my revenue based on that open market value. Similarly, for the purchaser, if they are actually paying using digital currency, they should actually record that expenses in their profit and loss account again based on that open market value in ringgit Malaysia. Now, if we actually move on, I actually have one more page in terms of some examples. Sorry, earlier page. Yeah. Okay. So when we actually look at this, right? So yes, you can go on to the next page. Yeah, sorry. So some of you actually may be thinking in terms of let's say if I have actually determined that I am in trading, right? Then how do I then calculate my gain and losses, right? So one of the key component is actually talking about acquisition costs, right? So your selling price, right, minus your acquisition cost, right, then that will actually be your gain or loss. Yeah. So in the guideline that was issued by the RB, they have also indicated that what exactly would be the acquisition cost for the digital currency. Yeah. So then, of course, first thing first, it must be in ringgit Malaysia, right? So the acquisition cost must be actually in ringgit. Yeah. And they've also indicated that what is the principle? Because when you actually talk about digital assets, right, you could be purchasing digital asset at different tranches, or you could be purchasing at different timing, right? And when you actually sell or realize it, then how exactly do you determine which tranche did it come from? Because the price is fairly volatile. It actually changes every day. Yeah. So the tax authorities did set out in their guideline to say that, okay, it should be on a first in, first out principle, unless, right, you can actually provide evidence to say, okay, the digital asset that I'm selling today is in respect of the latest digital asset that you purchase. And therefore, the cost that you're taking is also based on the latest and not based on first in, first out. Yeah. So if you are able to prove that, then yes, you can use your basis. Otherwise, the general concept is first in, first out. Yeah. So whatever that you purchase first is treated as if it's disposed first as well. Okay. Now, and if let's say there are circumstances whereby somehow you cannot determine your acquisition cost, right? Then you need to value your digital currency at using fair value. So what it means by fair value is that this is actually the rate prevailing on the transaction date based on the acceptable and verifiable digital currency exchanges. Yeah. Okay. So with this, I would have actually covered everything that I wanted to cover from a tax perspective in terms of unit trust as well as from a digital currency perspective.
Okay, thank you so much, Han and Tianyi, for the very insightful sharing. Learned a lot. So if you're interested, okay, go to our next slide. So if you're interested to get started with any of our funds like Han has mentioned, or just learn more about them, you can either scan this QR code to get started, or you can head to our website to read more about them. So that's just a little bit about what we do at Halogen and our thoughts on the markets. And at the same time, Tianyi has covered quite a bit on the crypto taxation for 2025. So we have a lot of questions that we would want to address. So let's go through them. So to get things started, we actually have three pre-selected questions. Three pre-selected questions from the floor. And then after that, we will open it up to any live questions from the audience which is coming. So okay, allow me to go through each question. I think this question, let's go through the first question first, which is pointed to Han. So okay, what's the difference? We get this a lot from the audience and also from the public generally. And this is the question. So what's the difference between investing via an exchange versus through a fund manager like Halogen? I think Han has addressed this a little earlier, but maybe he wants to expand a little further.
Sure. I'll answer it straight away. Thanks, Tiani, just now for that really awesome sharing. I also learned a lot, not just the audience, I'm sure. Yeah, this is a very important question we get a lot, which is, hey, look, what's the difference, like? And I know I shared the table earlier, which is where we sit in the industry. But then to the user, what's the difference, right? I think the key here is what they are used for, right? An exchange, as the name suggests, is for you to make an exchange between ringgit and asset to ringgit. So likewise, if you go to the equity exchange, Bursa and via the brokerage, right, you exchange your ringgit for shares, right, in Maybank, Top Glove, all that. So for us, similarly, right, like we are not an exchange, we are a fund management company. So you think of what a unit trust is in the equity space, is somebody who manages a basket of equities or bonds or any assets for you on your behalf, right? I think that's a big difference, which is the nature of what you do, right? You don't do it yourself first, and second, someone do for you. So that's one difference. But there's a lot of other differences, and maybe I'll go through a few of them right now in the next slide, which is am I have player control? I have control. Okay, which is a few things, a few more technical things other than just that very simple thing, which is we do for you, right? Which is we like to think that for people who don't want the fuss of having to hold their own tokens, buy their own assets, value their own assets, we are here for you, right? We give you regular reporting, on a daily basis, NAV reporting in a IFRS, MFRS compliant way. So somebody, let's say you're a company, you're an individual who gets audited, you have a nice statement which is very clear and compliant with all the regular standards. The fourth item that's very important, which is we use a trustee, right? Because all digital assets are held in a trustee segregated wallet. This is not the case with majority of exchanges, which was an issue in 2022 when exchanges go for liquidation. Your assets get caught up in that liquidation process, right? But with a trustee structure, this obviously doesn't happen because we are independent from the trustee. Trustee is independent from us, and that safeguards your assets. And I guess a lot of things what we're talking today is about the tax issues, right? Or tax certainty, right? If you are trading frequently and you meet certain badges of trade, which Kenny clearly explained just now, right? There's a risk that you run from trading income tax exposure, right? By trading on either local or foreign DEX, doesn't actually matter, right? The activity is the same regardless, right? Which is you locally are trading actively. There might be income tax exposure for you. Whereas like if, in Malaysia, in a ringgit domiciled funds, we are a local asset, local fund, you get your capital gains tax exemption, at least until end of next year, and then we'll see what happens when the government extends it beyond that, hopefully. And obviously because we are a licensed fund manager, right, what you're actually investing in is a wholesale fund, a unit trust, right, which becomes a lot easier when you're speaking to a bank. Hey, what are you investing in? Oh, okay, I'm investing in unit trust. When it comes down to things like withdrawal limits, investment limits, all those things tend to go away. So yeah, so that's in short. So I mean, but the best way to think about it is, imagine if you go, for those of you based in Klang Valley or Penang, when you go to Money Changer, right? Let's say in Mid Valley, in KL, or in Johor, or in Queens Bay Mall in Penang, when you go to Money Changer, right? When you change for dollar or yen or euro, right? Do you change and then leave your money there? You say, oh, okay, thanks for the dollar. I leave the dollar first. I go shopping first. I come back later. I come back tomorrow. You don't, right? You go there to make an exchange. right? And then you take your money and you invest it somewhere, or you put it in your wallet, put it in your pocket, right? So that's how I would say the big difference between how I encourage people to use exchanges to exchange and how people think about investing, which is to manage their own investments or have somebody help them manage their investments, which is what we do.
All right. Okay, that's for our first question. Thank you so much, Han. Let's move on to the second question, which is I think this is for Tian Yi. So is taking income or airdrops considered taxable?
So in terms of staking, right, I think generally it will actually involve you staking for example, your tokens and coins, and probably you get rewards in the form of tokens as well, right? So then if you actually do get rewards in the form of token, the taxable event will likely happen is that when you do realize it eventually, right? So but when you actually realize it, then it goes back to the same concept that I mentioned earlier, batches of trade, right? So meaning to say that when you actually look at is your intention, your motive, is it for generally you do trading, you actively monitor, trade and all, and therefore it is considered your ordinary income, or it's more long-term investment. Yes, you could stake it, then you receive the token, but you still keep it, and then you realize when you needed to use the money, for example, right? Then it could be evidence of a long-term investment and therefore capital in nature and not taxable. So I would say that, it really still boils back down to your profile, right? In terms of how you actually invest. Yeah.
Okay, let's move on to the third question. So we also received this question quite a lot, specifically this question. So for Tian Yi, how do you define the length of ownership or frequency of transactions to determine if the investment is for investment capital or for trading revenue?
This is a tough question. Yeah, because actually, unfortunately, Malaysia, we don't have a safe harbor rule, right? So safe harbor rule means to say that, if you own less than 24 months, 12 months, or, whatever limit, then it's considered revenue or capital. So unfortunately, Malaysia, we don't have this kind of rule. So the part relating to length of ownership, frequency, and all is very, very subjective. Yeah. And the batches of trade that I mentioned earlier, right? In fact, those are principles that were established from court cases. So you can imagine, in fact, right, there are a lot of court cases out there which deliberated, right, in terms of whether a particular transaction is actually capital or revenue in nature. Frankly, I've also seen certain circumstances, right, where sometimes you may own for many years, even up to 8-9 years, right? But because of the other circumstances surrounding that transaction, the court also ruled that, it is actually revenue in nature, even though you've held it for many years. So that's why I said that it's not a straightforward answer. Unfortunately, I can't give a straightforward answer because you need to really look at the entire batches of trade holistically, look at your facts and circumstances for that transaction, then to determine whether it is capital or revenue in nature. And there are many court cases surrounding this particular issue. But unfortunately, as I said, Malaysia, we don't have a safe harbor rule to say that, so long as you hold 24 months is considered long term. We don't have those sort of rules. So you still need to go back to the quite subjective, I would say, depends on the facts of your case.
Okay, back to batches of trade. Then let's go to the. Okay, hold on. Let's go to the fourth question. Okay, I think maybe this one, maybe both of you can chip in. Let's see. So by an anonymous attendee, so I've invested in a cryptocurrency back in 2015 at a very low price. Couldn't remember the purchase price and there's no way to trace back. In this situation, how will LHDN tax me when I sell it? Thank you. Maybe it's Tian Yi or Han.
I answered 30 seconds, then I pass to Tian Yi because she had some point just now. Tian Yi had some point about like how to do fair value versus acquisition price.
Correct. Yeah.
So, but I'll answer very quickly first, which is if you bought it in 2015, you either bought it A through an exchange, means you have an exchange account somewhere, or B on your private wallet, right? 2015 probably either Bitcoin, Litecoin, or Ethereum, only one of those three. So you have the date in which on the blockchain, the date and time of which you acquired that asset, right? On chain, right? Either it's an exchange wallet or your own wallet, which you have. Either case, you have the exchange record or your wallet record on the blockchain. You can check it out. And once you have the day, I guess you have the day of the transaction or time of the transaction, I pass then back to Tian Yi how to value.
Yeah. So of course, in terms of the part the best is if you can actually get back what Han mentioned, date of transaction, and you can have your wallet, right? The records or even bank statements or whatever that you actually use to purchase, right? That is the best case scenario, because from that amount, right, then you actually determine that, okay, this is how much you paid for to acquire the cryptocurrency back in 2015. But let's say because 2015 is about 10 years ago, right? Worst case, if you can't, right, then the next thing is like, maybe based on the indicative date, whether can you actually check that valuation and try to use that as the acquisition price. But that would mean that it requires some convincing to the tax authorities, right? To say that, hey, this is the indicative value. And why would you want to prove that? Because worst case scenario, if you really cannot prove your acquisition cost, right? The worst case scenario is that the tax authorities would just treat your entire proceeds to be a taxable amount, right? Which you don't want to, right? So you need to, at the very least, if at possible, try to find the records of the actual transaction. If you really don't have, then whether based on the dates, can you get some certain indicative value, but that requires convincing to the tax authorities to accept that value as your acquisition price. Yeah. So basically market value back then. Yeah.
Okay, got it. Question 5, I think this is towards Han. So by Jasper, looking at the current financial trends, can Malaysia push crypto towards a legal tender due to the US pro-crypto influence? Second part of the question, shall we proceed? Are we also going to look at a potential ringgit stablecoin? Also, can we see there's a potential of any crypto tax-free in Malaysia, just like the US did on their own crypto? So I guess the first two is they're for Han, and then maybe the third one for Kenny.
Okay, sure. The first one is can Malaysia push crypto towards legal tender? I think the challenge here is that there is no legal tender here in Malaysia except ringgit. So not even gold is legal tender. You cannot force a shopkeeper to take gold, right, as payment. They can accept gold. So a lot of people confuse legal tender, right? Actually, right, anyone can take any asset for any payment. Like, can you just say you can actually accept digital currency if you want as payment for your services or goods, right? But the definition of legal tender means if in Malaysia, if somebody offers you to pay in ringgit, you cannot say no. You must say yes, right? You cannot reject a payment in the form of ringgit. You can reject payment in Bitcoin. You say, I don't accept Bitcoin because it's not legal tender. But you can certainly accept it if you want, right? But if you're a shopkeeper, you cannot reject ringgit. So I don't think there will be a situation where crypto is legal tender for that reason. That doesn't mean it cannot be accepted. You can have entire community accept Bitcoin, no problem. We can, let's say I'm sitting in KL and the whole KL decides all shops can accept Bitcoin because it's better. Then that it doesn't have to be legal tender, right? You can still accept it. But legal tender means you have to. I can force you to accept my ringgit. So personally, I think no. Can we look at potential ringgit stable coins? If you think about what is the purpose of a stable coin, right? Initially, it was a place where I can go on chain and go off a risk asset. So I'm in Bitcoin, I'm going to go off a risk asset, but I don't want to buy US dollar in the bank. Can I hold US dollar somewhere? And that was the purpose of a stable coin. And partly people wanted that because it's very cumbersome to move US dollar around. If you remember the time before like Venmo and Cash App, it's really, really hard to send dollars to people, and it's like there's huge fees. In Malaysia, we don't actually have that much problem. Number one, like we can send ringgit almost instantly to anyone, any business, anyone, like via Do It Now. So we don't have that kind of usability problem that the US had 10 years ago, right? And second, the other reason why people want access to stablecoin is because then once you're in stablecoin, you can swap for a crypto asset easily, right? Versus a ringgit or a US dollar, right? You have a ringgit stablecoin or US dollar stablecoin tether, you can swap or you can exchange for a crypto asset quite easily. So for me, that's the reason why we might want to consider a ringgit stablecoin to get crypto investors investing in Malaysian assets. The last one, I don't really understand the question, but maybe it's for Tianyi. I'm guessing this related to some jurisdictions in the States making it capital gains tax free for cryptocurrency transactions, sales, basically. No capital gains tax in the States. But I guess in Malaysia, we have the exemption anyway, if it's capital rather than income.
Correct. Yeah. So maybe just to reiterate, right? If let's say you're not seen as trading in crypto, right? So trading in crypto, as I say, is ordinary income. You have to pay tax on that. But if let's say for your crypto, whatever gain is capital in nature, at this moment, right, the capital gains tax in Malaysia is very limited scope. It's only on unlisted company shares. right? Unlisted company shares, which crypto is not, right? So essentially, if it is capital in nature, then there is no tax in Malaysia.
Okay, next question, question 6. I think it's for both. So first two, I guess, is for Han. So are you governed by SC? What's the performance of each of your fund? How is the recent capital gain rule affecting your fund transaction? The last one, for income tax, how is LHDN categorizing us as frequent trader? How will e-invoice affect us traders? So yeah, Han, you want to pick up the first two?
First three maybe,
Yeah,
two and a
first
half
three.
lah, right? The first two and a half,
Yeah.
then pass to Tianyi. So
Yeah.
are you governed by SC? More than governed, we are more than just regulated and registered. We're actually a licensed entity under the CMSL. So you check, there are actually only 8 activities you can license, that get a license. We are a licensed fund manager, and our license is granted by the SC, issued by the SC. So very much so. No, we are not just governed, we are fully licensed by the SC. Which I guess we've been the first in Malaysia to do so the past 2 years, and still only to have crypto funds in Malaysia, like a fund with actual crypto inside, rather than any other structure. What is the performance of each of your fund? To go through a bit hard, but long story short, for our passive funds, the Bitcoin and Ethereum fund, I dare say we are doing better than any other passive tracker, right? For 2 reasons. On the Bitcoin side, because we're less constrained than the ETFs. ETFs are very constrained in how they can deal. We are not that constrained how we can deal. For Ethereum side, we are allowed to do staking. We got staking approval when we launched the fund. So that's why the fund can over time outperform a traditional Ethereum ETF or other Ethereum funds. The other funds are a little bit more active. Our funds, we are all public one. There's nothing to hide. You can go online, halogen.my, check out the performance of all our funds against whatever we want to benchmark against. And you can see the relative performance of our funds. So that's kind of 1 and 2. Recent capital gain rule affected fund transactions. It hasn't really affected us, partially because what Kenny said earlier, like we are a local fund here in Malaysia, we have those relevant exemptions. Also, capital gains tax is for unlisted equities, right? And of which we don't really deal in unlisted equities, we deal in digital assets and crypto. But I don't know if Kenny disagree or not. Pass to Kenny for the remaining 3 and 4.
Yeah, I think you sum up the question 3, the answer for question 3 very well. Yeah, so you're actually the tax experts already. Yeah, so you're right in the sense that because of the various exemption, right? Frankly, even if you do invest in foreign assets, right? It will still be exempt for the unit trust. Yeah, but Malaysia, the scope is actually fairly limited at this moment. Yeah, and I guess to answer, I think number 4, right? Yeah, a lot of you are actually very concerned and say, how are we be considered as trading or non-trading? So as I said, unfortunately, I couldn't give you an exact guideline, right? But except that, actually, it is really up to how you justify it. Yeah. Frankly, if the tax authorities come and audit you and they raise a question, you will need to be able to justify to say that, how am I not a trader? So these are actually evidenced by things like, your statements, your transaction, when did you purchase, you transfer or sell your digital currencies and things like that. This will actually be the backup, right, to support your story. If you say that I'm actually not a frequent trader, right, then your transactions, right, should show that you are really not a frequent trader, and therefore anything should be capitalist in nature. Then when the RB actually do come and audit you and ask you, you just need to be able to produce those evidences. Yeah. Then when you talk about e-invoicing, how would it affect traders, right? Well, from the unit trust perspective, when they do actually have distribution to you, they will be issuing a self-built e-invoice on the distribution. But that distribution is already, because it's a collective investment fund, right? Actually, if you think about it, the unit trust is the one that invests in all these crypto assets, right? But then the unit trust, based on whatever returns and all those, then they will declare, right, a distribution. And when whatever that you see as your distribution, that will actually be whatever that's distributed by the unit trust, right? That is actually from a fund perspective. But I guess if you are saying from your own trading perspective, right, then provided it's actually a Malaysia exchange, right, then if it is listed, there's certain exemption on the e-invoicing. Otherwise, then there are certain requirements. Then it really depends on the issuing party.
Next question by Suki. I think this is a quick one to Tianyi. So since Luno is regulated in Malaysia, does this mean that the crypto we invest through Luno can be booked into a company account?
When you say company account, means that you you just booking it as your asset, right? I guess. Yeah. Because I mean, digital assets are currently intangible, but you can book it into your accounts as an intangible assets. I hope that answers your question.
Okay, Ken. Next, what is your opinion on setting up a Sendirian Berhad just for off-ramp crypto purpose and enjoy better tax brackets, tax rebate of that Sendirian Berhad, not business operations? Maybe this is for Tian.
Yeah. So I guess, I mean, nothing to stop you to say that, oh, if you actually want to, as I suppose in personal capacity, right? There's nothing stopping you from saying that, oh, I want to set up a company. You invest in that company and that company invests in crypto. I guess the part on the tax rebate and all those, you're probably referring to the SME, right? Because SME, they do actually have some I would say very attractive tax rate, 15%, 17%, until it exceeds 600,000, then you're taxed at the 24%. As opposed to individual, right? Although we are at scale rate, but let's say if you already achieve a certain level, like above 2 million, right? Your tax bracket is 30%. So when you compare to 15, 17, 24 versus 30%, right? So that is where, something you got to evaluate, right? But I can say that, nothing stopping you, but it needs to be, I guess, a proper setup, right? Proper setup with funds being invested and they invest and things like that. Yeah.
Okay, is crypto considered as foreign source income?
So it depends on how you invest, right? Is it actually local exchange or is it foreign and things like that? Of course, if you purchase it like outside Malaysia and all those are considered foreign source.
Okay, we'll go quickly. So how do I prove to the IRB that Bitcoin has been in my ownership for many years?
So again, this will be based on your receipts, your exchange records, any record that, or even bank statements, whatever that can show that, oh, this is actually when I purchased it, and what value, yeah.
Okay. Is there a specific section or form within the existing tax return, Borang B or Borang BE, where long-term cryptocurrencies holdings should be declared even if no taxable event has occurred? Yeah, if so, can you guide us on how to properly disclose this information?
So if it is long-term crypto holding, right, even if you dispose it, it should be capital in nature. No need to disclose. Yeah, because it's not taxable in Malaysia.
You don't need to put your assets into a Borang B, I think.
Correct. You don't have to. Yeah, it's just declaring the taxable income.
I don't think you put your house title in the Borang B, right? So similar.
Okay. What specific criteria or holding period? I think this is
it's kind of the answer.
This is answered.
Answer, yeah.
Yeah. If I just use by James Tan, so if I just leave my funds in USDT in Binance, for example, the funds are not considered brought back to Malaysia, right?
So when we talk about brought back to Malaysia, means that it is actually credited into a Malaysian bank account.
Okay. Holding period. Okay. Yeah. If realized profit from trading in foreign DEX platform convert into Bitcoin, transfer to Lunar Malaysia in Bitcoin form, is this monetary transfer taxable? I think this is also sort of addressed, right?
Yes.
So maybe just to add on, right? Because I presume then this is more from an individual perspective, right? So as I shared earlier, individual, if you're actually looking at, any foreign income or foreign gains that is remitted back to Malaysia, as an individual, you do have exemption up to 2036.
Okay, moving on to a question by Larry Yee. So mining crypto is taxable in Malaysia. If the mining platform is managed by the US, is the US by foreigners or entities, does this mining income considered as foreign income? If yes, does this foreign income be received by tax resident individuals are exempted until 2036?
I guess you got to ask yourself, like, where did you conduct this activity, right? Why I mentioned that is that you imagine, right? Sometimes even let's say, like, I just give you a very simple example, right? So if I'm actually a company like exporting goods, right? I'm selling the goods all in US or to US and all those, but my operations are all based in Malaysia. So of course you're paying Malaysia taxes, right? So then when you talk about, yes, your platform is managed by US and all those, but I guess the question is that when you're actually doing the mining, are you actually then running an operation from Malaysia? right? So if your activities are carried out in Malaysia, let's say you do mining, people pay you fee for you to mine on their behalf, or you mine yourself and all those, and you carry on the business operation in Malaysia, that is actually considered Malaysian source. Yeah. Right.
Okay, by Victor Johan, Halogen wallet. What is Halogen wallet? Is it similar to Coinbase wallet? I think this is to Han.
All right, very simple. Maybe Jai, you can answer this actually. But like Halogen Wallet is our app platform for you to manage and view, manage and invest and redeem your Halogen funds and wallet and mandates. So if you invest in Halogen funds, you can view it entirely online and manage it yourself online.
Okay. I think a follow-up question by Suki. So basically a company regularly invests and withdraw from Halogen Income Fund questions. The company will receive fund from customer regularly and will directly invest in Halogen Income Fund to earn profits rather than putting in the bank. Maybe after 2 weeks or a month, the company will withdraw to pay the company expenses, and this will happen regularly. If in these circumstances, does it subject to capital gains tax?
So our money market, the share ringgit income fund, I guess. Well, Tianyi is the tax advisor for the fund, so maybe she can advise.
Yeah. So this one, because if you are saying that you regularly invest and withdraw, right? I think from this already, somehow it sounds like there's the intention to trade. Means you're actively, you invest, you withdraw, you pay, then you invest again and all those. So, but it's actually not capital gains tax per se. But if let's say this, based on all the circumstances or badges of trade, right, you are regarded as trading, then for the company, any gains that you actually make from this will actually be treated as trading gains.
There's a question to Tianyi. Can you repeat question 15? 15. Your thoughts on question 15.
Okay. Yeah. So, okay, maybe I just repeat this part, right? So this is trading in foreign platform, right? And then initially it is transferred and converted into ringgit and then transferred back to the Malaysia account. So presumably, let's say you actually have this trading outside Malaysia, you make a gain out of it, and then eventually transfer through Luna, Bitcoin or whatever, then back into a Malaysia bank account. So then when you transfer to the Malaysia bank account, it is considered remitted back into Malaysia, right? But when it's remitted back to Malaysia, then because for individuals, you do actually enjoy foreign source income exemption. Yeah. So this trading in foreign assets, then you remit it back to Malaysia, it is exempt for individuals up to 2036.
Okay. Thanks, Tianyi. So question 19 by Penny. If individual disposal shares in the company individual disposal shares in the company doesn't fall under capital gains tax, right? Only when the company sell of the investment in another company shares. How if capital gains tax is at net loss?
Okay, so you're right. For this unlisted Malaysian company shares, right, for individual currently it's out of scope. So as an individual, if I own shares in a Sendran Berhad, I sell it, no capital gains tax, right? But if a company sells the shares in a Sendran Berhad, then yes, there is capital gains tax. Now, if there is actually losses, right, you can actually carry forward the losses to be used.
Okay, question 20 by Buminatan. So trading crypto is friendly to banks in Malaysia. Do they allow me to have current account?
I guess I answered this one, which is depends if you're a company or a individual. As you know, there are several places to trade in Malaysia, which you can sign up and then attach your bank account details to, and I think most Malaysians will attest that that is the case, no problem. For a company though, I think you've got to legitimately prove that your company operations is in like internal trading, or I trade for myself, or I trade for a principal, which is me. This is activity, and then do the relevant registration with SSM that this is the activity of the company, and then open your bank account that way, right? Rather than not telling, because then a bank will not see your transactions as legitimate to your company activity.
Okay. Teddy, anything to add or okay?
No, I'm okay.
Okay. guess this is for Han too. Can a Sundram Berhad invest in Halogen Cara Bitcoin Fund?
Simple. The answer is yes. And I guess the follow-up to that is why should they? I think on the one hand, like Tianyi kind of alluded to that earlier. If you had to buy Bitcoin yourself, it'll be mostly treated as an intangible asset, which I guess is a lot of people's not their intention when they invest in Bitcoin. They want it treated as a either short-term investment or financial asset. And because a unit trust is considered a financial asset, you can categorize it in financial asset and bring it to P&L. But I guess Tianyi will disagree if I'm wrong, but I think that's the case. So yes, we have many Sundram Berhads in our Bitcoin fund.
Okay, by Arun. How does one retire on crypto? Situation for very long-term investors who have made millions. Should they quit their day job? Will they be taxed for their crypto savings that's meant to support them for retirement?
I answer first part and then Tianyi answer second part lah. Okay, the first part is you think of it as a retirement portfolio. I think there's absolutely no issue with saying, hey, look, I've invested over a number of years or whatever, and now I want to retire. I don't want to work anymore, and I want to liquidate my portfolio to retire. No problem, right? I think. But should they quit their day job or business? I think that's a very personal question. I cannot answer that. It's up to you. But the second part about whether they are taxed on their crypto savings, I think is an important part, right? Which is if you liquidate your assets over a period of time, so let's say I'm retiree, I want to sell down my portfolio to fund my expenses. Is there a risk, Tianyi, if I do it every month, for example, pay for my bills and stuff? Will I have to demonstrate that I'm not actually investing anymore, I'm not trading anymore, I'm just liquidating, selling down every month?
I think it then also goes back to the evidence, right? If you can produce that, as you were working throughout the years, you've been investing and investing, in crypto, and now that, come retirement, instead of realizing everything at one go, right? You actually want to then, okay, like annuity, right? Draw down a little bit by bit and all. So if you actually have sufficient evidence to prove, right, that track record, right, to say that, hey, I have been investing, and then now that I'm retiring, I'm actually just using it progressively and all those, I think you do have some case that you can actually support, right? Subject to all the documentation that you can produce. If let's say one day tax authorities were to then ask you the question. Yeah. But documentation, I think I have to emphasize, documentation is very important. So your track record and things will really tell the story.
Okay, we'll go down to our last 5 questions by Jason. So a company has to forecast income for their CP204 in advance every year. If a company buys Bitcoin for the long term and their holdings appreciate significantly, even if unrealized, will there be complications with LHDN?
Maybe if you can differentiate between investment in Bitcoin as an intangible asset and holding Bitcoin yourself, or investing in a unit trust with Bitcoin inside.
Maybe I can address it from a perspective. I mean, I'm assuming provided these are non-financial institution, right? Because
assuming you're just a
normal company, right?
Normal company, yeah.
Right. So for a normal company, right, when you actually talk about investment, so frankly, whether is it investment in unit trust fund or investment in Bitcoin, right? So long as there's no realization, whatever revaluation, right, is actually just unrealized. So what I call is just an accounting gain, right? So if it's just purely an accounting gain, it will not actually attract tax until you do realize it. And when you realize it, that is where you need to then still assess, right, your investment, be it in Bitcoin or is it unit trust, right? Is it for long term? Therefore, it's capital in nature? Or is it actually short term and it is actually regarded as trading?
Okay, by William. Is the crypto that Halogen owns stored in a wallet or held on an exchange?
Good question. We store it in a multi-sig, multi-institutional wallet, right? So it's a wallet infrastructure provided by BitCo, who is also the custodian. And then the trustee is a signatory, and they have multiple signatories, institutional signatories in there. And for us, we are one part of the shards of signatory. So it's multi-party, multi-institutional, multi-sig wallet. Now, we do trade on exchanges, but we do exactly what I said, which is how you should behave on an exchange, right? We treat the exchange like going to Mid Valley change currency, right? You go there, you change your asset, and you take your asset back, right? So that's how we use an exchange, right? We don't keep funds. We try not to keep funds on exchange for the same reason as the Mid Valley forex shop.
Okay, Eric, Halogen is a wholesale fund. When will you change it to a retail fund? I've been asking this question since last year. Good question. Maybe
Good
Han, you want
question.
to
I
share
actually, yeah,
things
you
on
can also answer this. We're really working on it. It's
Mm.
something that we're working on, which we should have some news in the next month or two on this.
Okay. Okay, by Edward, we'd like to confirm crypto in exchange platform versus crypto in private wallet. Is it taxable? With Halogen funds, the gain is not taxable, right?
Maybe I summarize easier and then can you agree or disagree? I think where you hold it is not as important for tax reasons. Is the where you hold it is not so important to how you bought it and how you're selling it, right? Your activity. So where you hold it is not so important, right? So think of it similarly to this, which is if you have some funds in a Bursa exchange and you versus in your personal wallet here, you have a wallet, you put some money in here, right? Does it matter? It doesn't matter for tax reason, right? It's about what you do, right? So I think that's the most important part, right? And with our funds, we stated a few times already, which is because we put the crypto assets within the unit trust, so we benefit from whatever the unit industry gets exemption from, including what we said earlier about foreign source income, including what we said earlier about capital gains tax. Even if it comes to unlisted shares, we benefit from those exemptions. So just to answer the question, it's more about what you do rather than where you put it.
Agreed. You sum it up very well.
Okay, last two by Jonathan. How do you treat the nature of transaction if the nature of funds traded at first and then after selling into stable coins, it is then used to buy a fund with Halogen, then subsequently sold to fiat after a reasonable holding period, i.e. 6 months to 1 year. Is batches of trade and taxation considered only at the final point of sale to cash or holistically? These two words. Tianyi, perhaps?
After selling into stablecoin, used to buy a fund, then subsequently sold to fiat after reasonable. Yeah. So I guess it also depends on where exactly is your transaction or your potential taxable gain and all arise, right? So let's say if you used to buy a fund with Halogen, then you sold to fiat, right? Means you realize it, and if you actually make a gain, and that is the part then you need to actually consider, right? At each point of the transaction, if you do recognize a gain, you do need to then consider to say that, is it actually a taxable gain or not?
Okay, I think crypto gifts, receive or send taxable. I guess this is addressed with the airdrops question, sort of.
Not really, right? I think this classic question, which is if I give it to a friend, if I give some crypto to a friend or to my family member, right? Is that considered income to my friend or family member? I think that's a question for Tianyi.
I think it's just a gift, right? I mean, if let's say you take out cash from your wallet and you give to your family, allowances or whatever, that is actually not considered taxable. Yeah.
Last question. By anonymous attendee, does that mean that any frequent subscription or withdrawals from a local sukuk bond fund might be subjected to tax for corporate investor as well?
It is a potential. That's why I say it really, really depends on your profile as well as then, how have you actually traded, right? All this while, right? In terms of if you do demonstrate that it's frequent subscription withdrawal, as in actively managing the trade, right? Then yes, you have that risk of potentially being regarded as trading. Yeah.
Yeah.
So again, it really depends on the evidence you see of your activities.
Yeah, I think like if you're a bond trader, I think you confirm be taxed, right? There is no ambiguity there. If you are just say a corporate treasury and you buy and sell a few times a year, depends what you mean by frequent, right? If you do it daily, most likely that's a clear batch, right? If it's every day you buy and sell, right? But you can't do that with the unit trust anyway because it's daily NAV. But I guess for me it's like what Tianyi says about the intention of what you're doing, right? If it's cash flow management, then it's really not trading one. And you can demonstrate that it's cash flow management. Right?
Yeah. And typically for corporates, for companies, right? Generally, before you invest in something, you also actually sort of get endorsement from the management, right? Or from your board of directors to say, hey, this is our plan, this is our business plan and all those. Then actually your intention can be clearly seen from there to say that, is it really meant for long term or is it a very, very short term just to monetize and things like that? So frankly, when the tax authority, they come and audit, they look at all these documents for you to see how you justify.
Okay, I think that's our final question for this webinar. I think that's all the time that we have. So I just want to say thank you so much to both Han and Tianyi for the sharing today. And thank you so much everyone for, still staying. I think we have still about 300 plus of you. So thank you so much everyone for your participation and your engagement today. I know we still have a lot of questions we have yet to address, but feel free to, reach us either via our website or socials, and then we'll be more than happy to pick them up. So yeah, we really appreciate your time and interest. And then with this marks the end of our webinar today. And we really hope to see you in the next session. So I think for the question on will you be getting the slides? We'll be actually uploading the recording on our YouTube channel. So do anticipate that, and we will be sure to notify you once the recording is out. So yeah, thank you so much everyone for being here. I think 30 minutes to go before your lunchtime. So thank you so much for being here. So yeah, we will see you in the next one. Thank you everyone.
Bye, bye, everyone.
Bye.
Bye.
Bye everyone. Thank you everyone. Bye bye.